Hello, welcome to McBoss Capital channel. My name is Michael Chu, and today we are going to talk about the market, the stock market for the week ending July 26, 2024. And this chart we're seeing here is the volatility index, and I want to bring this up because to talk about it. Because this is, you can see it is more volatile each day, and we definitely saw the swings over the week, and we see lots of back and forth, and also so the volatility has started to jump up, and it started last week, and now it's make a new high again on Thursday. And despite Friday market was up, it didn't go down too much, so this is something to pay attention to, as this volatility is now in the midst of earnings season, and we'll talk about some of the earnings that, from Google and Tesla as well. So here we will jump to the notes and kind of go over the week, what happened, and hopefully we'll gain some insight as to what could happen as well the following week. And so first line here, we talk about, we are in the midst of earnings, and this next week we'll even have more earnings coming up from many stocks. And like we just talked about, volatility has really picked up. So so be careful about that. The thing that was very important, I know we are already in the midst of a pullback, or even some even call correction if it's more than 10%. This all started when Nasdaq extended about 8 or 9% from the 50-day, above the 50 days. So let's just jump to the chart here. This is the daily chart for Nasdaq. We saw it past the 18,000 mark right here, which is a very important key point, and then it shot up, for 5 days or so, hit 18,671. Then right here, you can draw, like, you can look at the where it is above the 50-day, and generally, you don't see that big of a gap, right, from the 50-day. Whenever it does, it tends to pull back, and this one was pretty big. Like I say, it might be closer to 9%, and so we start to pull back. In fact, we got a really big down day here, and then we try to go sideways for 3 days, and then after that we basically lost it right here, right? So this was from more than a week ago, and that's when the volatility also started to pick up. And then this week, you can see, Wednesday we have a big gap down day. And we'll go through what happened in a second here, but I just wanted to show you the chart here, because it doesn't look good, that's for sure. And now probably the biggest thing is we are staying under the red line, which is the 50-day, right? So this 50-day is not looking good, because we are now 3 days below it, and even today we couldn't close at the top. So that's another problem. Now, obviously this coming week will be a big determinant of some of the tech stocks and mega cap. So that will be very important, right, in terms of what could happen, right? If we have some big misses from those mega caps, that could probably easily drag this down further. And, again, I talk about some of the most important thing I look at is, like, because we went under the moving average, like both the 10 and 21 day right here, and that's also the 18,000 mark. Now we want to see how it reacts on this downtrend line, right? So, if it does come close to it, and that's roughly where the red line, which is 50-day moving average, is. If it does come close to it, can it push beyond that? Then that will give me more confidence that maybe a rebound is in place. But if it doesn't, and it just kind of, especially if it's like what we call a downside reversal, meaning like it hit that average line here and then it comes back down by the end of the day, that will be a huge sell signal. Even you know, potential for shorting this index here. But you know, and if we fail the 50-day line, you know, we could go, you know, anywhere from halfway point to between this red line and this 200-day average. And you know, usually it could go as far as, like, you know, halfway point or even as far down to here before we find any support. So yeah, so that's gonna be something we want to watch out coming this week or so. And again, earnings will dictate a lot of this, what will happen. So far, like I said, we will go through the earnings. Google, Tesla, it didn't do well on the earnings and guidance. So another thing, we want to study what happened prior to this drop, right? Because that gives us a hint, and whether we listen to those hints or, you know, have any sort of intuition to follow those and maybe start trimming our portfolios, especially if you have a lot of tech stocks, that will help you in the future, right? So that's why I'm going over this. So the equal weight NASDAQ 100, you know, what happened here was we have this breakout from a nice cup with handle, and then we built another very slight, you know, slope handle, which is usually very good sign. And then it kind of went up for like 5-6 days. It broke out and it went up for, like, you know, 5-6 sessions, and it looked really good right here. It was in the uptrend mode, and then it broke. It came down one day and then it broke that second day here, and that's a very bad sign. And look where it closed, right? It closed even below the 21-day. Generally, usually they close, like, you know, on the line, and then you kind of like, oh, it might bounce next day, but this one even closed below it. And then it keep going further next day, and you see it now hit the 50-day and it just closed right there, just the red line. And then the next day we rebound back to the 10-day moving average, which is really close. And then you see how it got rejected here the next day. It just came back down because the 10-day now is starting to slope down, and it just touched it and basically came back down. So that's the rejection right there from the 10-day moving average. And then the next day, let me just refresh the screen quickly here. And then right here we have this big gap down right here on Wednesday, right? And we just clearly undercut the 50-day moving average. So that's always a very negative sign when it just gapped down, undercut it, and you know, that's not a good sign. Although the volume didn't jump that day, right here, so that's interesting. But the next day kind of give that confirmation with the volume, so right there. So then Friday we have a very weak rebound. We couldn't even close at the top. So it's an inside day, they call it, because it was inside the previous day's range. So again, volume is really low. So again, the rebound has no power in terms of volume. But again, like, the most important thing, like, you know, is this 10-day moving average. It's just sloping down now, and you can see, you know, it hugs this line, and if we're too far away, it will come back. And again, same thing, we want to see if it can either go through or it get rejected and come back down. So and this is the story I've been, you know, kind of conveying for the last week as well, last video. Any stock that is undergoing lots of selling right now, watch how it reacts as it come back, because they will try to come back to the 10-day line, just like how when you on the uptrend, it will always come back down to the 10-day line as well. So see how it reacts around that line, and that will tell you a lot about how it may continue its movement. So yeah, so those are two things that kind of precurse this you know, this week's sell-off, right, in terms of tech stocks. So so I just want to bring that up because, you know, and sometimes, you know, especially in the failed breakout, it could go a lot lower. The reason why is because a lot of people bought on the breakout, and they all think the same thing. It's like, well, it's going to pull back, but it's not going to pull back much, right? Because it's already broken out. Like, why would it pull back that much? And and then, you know, unfortunately, like, you know, I've seen, like, even if you go back to like December, was it? Yeah, like close to 2021, like in the late 2021, a lot of stocks, they broke out on the last base and they fell. And when they fell, what happened in the next, you know, 6, 7, 8 months? They just got killed, like those stocks, right? So so just be careful, like, because, you know, again, that's the next big question: is the AI boom or AI stocks boom out of steam right now? I'm sure a lot of people are, you know, thinking the same thing. Well, Nvidia is not gonna go down much more because, you know, it's the leader, and you know, it's lots of people will buy into it as it dropped. It's not gonna go down much. A story I learned, you know, was that during the internet boom in 1997, between 1995 and 2000, you know, we all know, you know, the same story back then was the internet versus AI today. And even though it ran, you know, 1995 to 96, you know, and then 97 even, but somewhere halfway through 97, it got killed. A lot of the internet stocks, you know, some dropped, you know, even 30 to 50%. So that's the mindset we have to be careful about, because we may be in the midst of an AI boom, but doesn't mean we won't correct 30 to 50%. So including, you know, a mega cap stock like Nvidia. Now, of course, no one thinks that, but we just have to be really, really careful about that. So we'll go through the days of the week. Monday, we have S&P and Nasdaq rebound sharply, given investors' hopes after last week's selling may be done. S&P climbed 1.1%, also hold the 5,500 level. And then Nasdaq also rose 1.6%, just closed near 18,000. So the Magnificent Seven also rise about 2% as a group. The Dow Jones also hold the 40,000 mark. Small caps rebound as well, with Russell recouping 1.7%. The energy sector was the only sector down on that day. So I just want to do a play-by-play because I think it's very important right now to understand how each day the index behaves. So right here, the blue bar here is Monday. And you can see last week we had 3 down days for Nasdaq, and then this week Monday we have a rebound day. You know, so it looks okay. We're still below the 10-day. So let's just go back. Let's jump to XLE for the energy sector, because that was the only one that went down that day on Monday. But you know, obviously you can see it did rebound by the end of the week. So that's XLE. So last week's 32% gain in the Cboe Market Volatility Index was the largest one-week gain since March 2023. So obviously we highlighted at the beginning that it went even higher this week versus last week. So that's quite important. And also, like last Friday, it jumped more than 20% above its 10-day moving average. Such sudden spikes often act as bottoming signals. Prior to Friday, the last time the signal flashed was April 12th. So again, this was based on not this Friday, but the previous Friday. Obviously, we know this wasn't true, because obviously Nasdaq did go down lower. So just want to highlight that. And then on Tuesday, we have Russell 2000 outperform again in the stock market. It also regained the 2200 level. It also served up lots of strong earnings movers. And then even as other major indexes faded during the final 30 minutes. In economic news, we have existing home sales in June came in annualized rate of 3.89 million units, a little below 4 million units. Hello, so on Wednesday, the Nasdaq gapped lower at the market open and kept dropping throughout practically the entire regular session. And it lost 3.6%, finished at the session lows. It recorded its biggest hit since October 7, 2022. So that's pretty much since the bull market has started, and since the follow through day on November 1st. Yeah, so that was when it was confirmed uptrend by IBD. It also closed beneath its 50-day moving average for the first time since May 2nd. And volatility as measured by the volatility index spiked 24% to hit a 3-month high of 1832. The NYSE composite also lost 1.1%. It also dropped in 5 of the past 6 sessions. And the S&P also got whacked 2.3%. The equal weight also dropped 1.2%. And Dow fell nearly 1.3%. And also Russell got 2.1% drop. The mid cap also slumped 1.9%, and volume surged on NYSE and Nasdaq. So a sign that institutional investors are taking profits. Nasdaq turnover jumped 36% to 6.74 billion shares, and NYSE saw 3.95 billion shares, also up 13%. The big broad declines came amid a perhaps too high optimism among newsletters pundits. This is the 7th straight week in which the bullish ratio was 60% or higher, typically a level in which the market takes a break. So on that day, we saw Google down, Tesla down, Nvidia down, Avago down, and then we have some also earnings news from these companies here. We won't go into that here. Make sure you guys follow my next video about how I trade certain stocks. What are the stocks on my list right now? So yeah, thanks. We'll follow that. On Thursday, we have the second quarter GDP estimate, growth at 2.8%, higher than the 2% estimate. And it's also up from the first quarter 1.4%. And the core personal consumption expenditure price index also rose at 2.9%, down from the 3.7% the prior quarter. So it is a little bit higher than expected. And employment claims fell to 235 versus the 238. A promising rebound faded badly Thursday as the S&P and Nasdaq reversed lower, extend Wednesday sell-offs. Dow Jones, however, climbed 0.2%. S&P lost 0.5%. Nasdaq dropped 0.9%. After being up as much as 1.2%. So it was a downside reversal intraday. For the Nasdaq, it was the largest 3-day decline since February 2023. And the small cap, however, rebound 1.3%. And 11 S&P sectors, fell, but energy sector was the only best performer. Volume fell on Nasdaq, but rose on the NYSE. That gave S&P 500 a distribution day for the total of 7 distribution days now. And then finally, on Friday, stocks were able to trim some weekly losses after the personal consumption expenditure price index reading. And core price PCE rose 2.6% yearly and slightly above views for a 2.5%. And then headline PCE rose 2.5%, matching expectations. So it was largely expected that investors like the news. So Nasdaq rallied 1%, even though it fell 2% for the week, and also it's still below the 50-day line. It's the second weekly decline in a row. So let me jump to Nasdaq for a second to show you the weekly chart here. So we already seen the daily chart. We are under the 50-day. This rally was about 12 weeks up, but now we have 2 weeks down, and you can see, you know, both weeks are pretty severe in terms of the height of the bar versus, you know, I mean, here we have one, right? That's really big bar right here. But you just kind of go back, probably the closest even here and here are a little bit wide, like longer. And then here we also have a longer bar here. So we'll see where, you know, things head next week. Like I said, I feel like the mega cap tech will, you know, make a difference here for sure. So that's really the key thing to pay attention to. So whether this rally still, you know, can go, I think we are near a critical juncture point. You know, again, if we do continue to be below the 50-day, then I see trouble, right? Because, you know, the next leg is right here. So we'll see how it reacts here, and that's gonna depend on next week. S&P popped 1.1% Friday as well. It was able to hold on to the 50-day line. So let's just quickly jump to that S&P here. And you can see it is slightly better than Nasdaq because it is above the red line, which is the 50-day. But the chart looks overall very similar, right? Because here's the 10-day moving average slope. And again, we are, you know, not getting close to that line. And so we'll see if it get rejected or whether it'll come back, you know. But if it does cross this line, you know, I'll be a little bit more optimistic, you know, as long as it's not a head fake, right? So meaning it closes above it and then the next day it rolls down or rolls back down, or even an intraday move where it goes up and then cross it and then come back down by the end of the day. Those are fake moves, and that could trap some people. So you know, we have Nasdaq more extreme in terms of sell-off. Then we have S&P also some slight sell-off. And here's Dow Jones. You know, we hit the 40,000 mark, you know, right here. It continued to go up just like other index, and then it started to slide. And you know, if we draw kind of a channel line from the tops here, you can see, you know, it did come back up above that trend line on today, Friday. And that's really good sign. And you can see, I think IBD guys were pointing this out, how this RS line, the relative strength line, it was not performing well compared to like S&P. And then look at it now, it's outperforming S&P, you know. And so, and again, this is very shows a lot of strength, including Thursday's rebound as well, with high volume there. So yeah, Dow Jones is showing a different picture compared to those other two index. And then we have also small cap, you know, jumped 3.5% this week, right? This is for the week, sorry. And it's near multi-year highs. So let's go look at Russell. And you know, there's definitely some rotation happening as mega caps, you know, getting hurt right now, and some money possibly flowing into the small and mid cap area. And this is a very strong chart. You know, this is you know, we had this 5-day run, and then we pulled back for about 3 days strong, and then we have started to move up this week. This is, you know, this week, right? And again, where's the 10-day line? That's the green line right here, and you can see it kind of just bounced off it, and then on Wednesday it did close near that area, and then but Thursday it again bounced, and then Friday we have a gap up in the morning, and then it just pretty much closed near the top, and so that's a really good sign for Russell. And this, you know, this kind of like you know, shot up and then it kind of consolidate around this area as the 10-day catch up. And so now we expect possibly you know, this to continue this uptrend, and we'll see once it comes out of this, and it kind of close near the last time where it closed right here. So very similar point right there. So we want to see, you know, if it does go up, I don't know whether it's going to be this strong or whether it's just going to more choppier, right? So it can go up and then kind of keep doing this, you know, kind of like this zigzag type of movement, right, as it goes up. So yeah, so that can happen. Again, what's happening with Russell is very phenomenal. You know, it's because of this. Number one, we have this many months of just consolidation, right? And the small cap stocks are very dependent on interest rate as they borrow a lot of money to operate, and you know, don't have much assets, so they pay high interest rate. So all those are resistance points that I point out here, and now we have broken this, and obviously we have again two highs here, one around this level, and then we have another one, like that's the all-time high, I believe, right there. And so we're getting closer and closer to those two levels. And we can look at monthly chart, you know, yeah, those are the two levels right here. We're getting very close to it, 2300 and 2450, right? So yeah, so this is quite exciting for that area. That's where I'm investing most of my money right now. And then we also have mid cap. Let me just jump to that. We have mid cap here, and you know, this is the monthly chart. Where is this one already broke out to new high several months ago. And look at the weekly chart. You know, look at this right here. A breakout hasn't taken off too far yet, but it's a good good chart still, right? And we just you know, digesting from here, and then we kind of have this strong run up. Looks very similar to Russell, and then we have a, you know, a 3-day strong pullback, and then so far the bounce is okay. You know, it's like bouncing off the 10 and the 21 day right here on the pink line, so the green line and the pink line, and then now, you know, it's making new closing high in the last week, so very good sign. So yeah, you know, mid caps, small caps, very strong in general. Again, you can see the RS line here as well, very strong. Let me go back to Russell. This is even stronger. You can see just the angle of the slope here on the RS line. So yeah, so I think the big question here is like, how much longer will this continue? Like, you know, the tech sell-off versus the accumulation here in the Russell and the mid caps, and this rotation that's happening. You know, if it lasts this whole summer, some people say that it could last this whole summer. So, you know, does that mean techs will continue to sell off for the whole summer? Very important question. So we'll see, but so far that's the trend. And yeah, let's jump to RSP, because we haven't looked at that equal weight S&P. And so we already saw the equal weight Nasdaq 100, and it looks very weak. This one actually bounced Thursday and Friday. You know, not too bad. You know, so S&P definitely looks a lot better than Nasdaq, and you can see the RS line is continue to hit, you know, go up. And let me just bring it back to the equal weight Nasdaq. And you know, yeah, you can see this one, it doesn't have much of a bounce on Thursday and Friday versus RSP here. So in general, you know, again, S&P, you know, may have a lot of mid cap stocks too, right? And then that one is doing not bad. So yeah, so that's you know, could be the reason for that. So advances led decliners by 4-1 on NYSE and 3-1 on the Nasdaq. So that's yeah, that's pretty strong day. You know, this is Fridays that we're talking about. And so the advanced decline line is right here on the black line. This is for S&P 500. And you can see here, you know, it did bounce a little bit on Thursday and, you know, quite a bit on Friday. So you know, that there's basically way more stocks going up than down. So 1900 compared to 300 here. Now the only problem here is the accumulation distribution rating from IBD, and E is the rating, which is the worst rating. So that could mean that there's, you know, on the selling side there's more volume, because that's what it's based on. If there's more volume selling on the selling, the stocks that are down versus the stocks that are up but have less volume. So, you know, so that could be a problem here. But in terms of breadth, it's definitely there. But in terms of volume, it's not so much right now. Again, I'm not sure exactly how to calculate this, but they kind of tell two different pictures. On the Nasdaq side, we also have E on the accumulation distribution. On the advanced decline line, you can see it also bounced Thursday and Friday. It's not, you know, it's not near the previous high. It's about halfway back to this high right here. But, you know, but at least it did bounce. So, you know, it's not, you know, because when I see the E, it looks really bad. But again, the volume does make a difference on this rating. So, so that's interesting. Just want to show you some charts from IBD newspaper, and this is the U.S. growth right here, real GDP 2.8%. So pretty strong quarter. Compare, you know, not bad. Like last quarter was a little bit weak, 1.5%, and then this quarter we back to growth again, which means stocks companies are making money because the economy is doing okay and doing well. And the core PCE price index, you know, it's a little bit high, 2.9% on the annual rate. But if you go to the on the yearly one, you can see it's at 2.6%. So it's coming down, and this is probably what investors was liking today, is how this continues to slide down, and we are 2.6%. So it'll be interesting to see what the Fed say next week, whether they think that they will start to cut in September, and I'm hoping they most likely will say that. That's what a lot of analysts saying. They will indicate, maybe not directly that they will cut, but there's a possibility that they will cut, right? And that will be a good sign for the market, because if this continue to weaken between now and then they're definitely gonna cut. You know, I think even now, right, like 2.6%, I think they might already consider cutting. So yeah, so that's that. The 10-year Treasury yield fell 4 points to 4.2%, and the 2-year slumped 12 points to 4.39%, while the yield curve continued to turn less inward. So just looking at the 10-year yield here, you can see, you know, it kind of bounced on Wednesday, but then dropped back on Thursday and Friday with the two economic news, right? With both GDP and the PCE numbers. So this is definitely in a long-term downtrend, and it fell here, and then even this last one, just, you know, not much power. We'll see. Right here's the lows, so it is making new lows. So yeah, the oil price fell to $77, near 77, and it's down 7.2% over the last 3 weeks. So you can see right here, this is like a cup. It was doing really well, and then it started to turn. And then right here, even here, you thought maybe it's just building a handle and then it's going to take off, but it didn't. You can see it tried, but then this one big day gap down brought it all the way down here. And then since that, again, this now 10-day moving average is starting to become a rejection point. And you can see how it came up here and then came back down on Friday. So in terms of oil, probably not looking too good, but the energy stock somehow is holding up, as we saw in XLE earlier. So they're very interesting. So you can see that bounce there on the energy sector. Of course, energy sector may include more than just oil and gas, so that could be a potential reason. So the IBD 50 slipped 1.3% this week. This chart is starting to look very ugly to me. We have this cup here, we have this really strong handle, and then we kind of break through. Again, very similar to equal weight RSP, but this is the growth IBD 50 growth stocks here. And then it kind of came back down again, and then tried to go up, and this is the second time here, and it fell, right? It couldn't come back above that previous high, and then now it falls pretty badly. And this is the part that is probably the most scary right now, is that, you know, some of the, you know, and again, IBD 50 growth stock, I don't know what their criteria is or how often they switch stocks, even when there's a rotation. But right now, in the midst of the tech sell-off, they definitely take you know, quite a big hit right now, and you can see the RS line has been like kind of going down now for quite, you know, for the last 6 weeks or even 2 months almost. So yeah, it's, like I said, it's looking a little bit ugly. We have the 200-day coming up. So last time it did find support there right here. So, you know, we could be, you know, because we got pretty close to it, we could be over. We don't know. Again, look at the 10-day moving average. If it does pass it confidently and follow through the next day, I think that will be a good sign. But until then, we have to wait and be patient. And so that's IBD 50. Let's jump into let's go into the semiconductor group SMH first. It gave up 3.2%. So let's look at that. Again, this is a very ugly chart right now. This is the previous base. Now we are even undercutting that buy point right here. So if we draw a line across, you can see we undercut that. And whether it will go further down here to the bottom of the base, because this was the last time it corrected, right? Which means a lot of people already sold. And then obviously new people would have come in here. And so again, the question is how many of them hasn't sold yet, and that's the question. And so again, you know, it could be over. We don't know. Again, this 10-day moving average is very key. If it surpass that confidently, if follow through, I would be more you know, want to buy this, you know, buy chip related stuff. But yeah, it could drop further to the halfway mark, and then or even further to the 200-day mark before it find more support. So, you know, those are the two levels I'm looking at. Obviously in this sector, you know, we have Nvidia, the mega cap Nvidia, very similar chart, very similar. Again, it hasn't hit the previous base right here, which is just slightly like $97. That could be a potential if it continue to come down, where it finds support. Again, the 200-day is coming up, so which is, you know, roughly about halfway mark from there, between here and here. So yeah, it could be another level to go down this far. I don't know, but yeah, those are the levels you want to watch. And obviously Nvidia is leading the chip sector. There's really not much movement in other stocks. You can look at AMD. This is probably you know, one of the worst charts compared to other chip stocks, just because it didn't really make a new, you know, this is the highest recent point, right? Whereas other stocks like Nvidia or other ARM or whatever, they all make new highs versus here. But this is again very sharp drop right now. So this one has been down below 200-day. Again, AMD, right? It's probably one of the weakest one compared to others. Now, it has a really strong run here, but this run was really just that was it. That was the story, and then after that, it just never came back. So let's look at ARM. ARM was really strong recently. Right here is the run, really strong. I traded it, and then yeah, it just gave up. And then I think yeah, was it Thursday? I don't know if there was any news, but intraday it was down almost 10%, and then it did recover to only drop 5%. Now this one looks like it's finding some support. You can see Thursday, Friday it closed here on the red line on the 50-day, and that's still kind of curving upward. And so this looks okay right now at this moment. But again, the key line that I'm going to focus my attention on is the 10-day moving average. How is it going to react when it comes near that line as it comes down? Will it get rejected? Usually when it get rejected, it will go lower and hit a new low. Taiwan Semiconductor, another big guy. Very similar chart to Nvidia as well. Again, they all look very similar. They all had this breakout run quite significantly, and then now it's below 50 days. I think that's probably the biggest problem right now for this area, is they're just all below 50 day. Again, this one came close to a halfway mark, and even the previous buy point right here before it bounced. But right now it looks promising because Thursday it actually closed up higher despite a big down day probably in the morning or first half of the day. And then Friday also closed higher as well, so that's a good sign. But again, this 10 days is going to be like, think of it like a blockade or something. You have to either jump over it. Yeah, so we'll see. But you can see they all move together. The software group is still down. It's not as severe as the chips, but it's still going down in a downtrend. You can see the slope line right now. Yes, again, you want to see this crossover. This one was very disappointing to me, because as this was running, I thought this maybe take the baton and from the chip sector and run, and obviously but like I said, this downtrend right now, you can see it found support at 50-day, the red line, because it did close back above it on Thursday and Friday, I believe. Yeah, Thursday was at that line, and then Friday it closed above it. Again, this is not over until we know it can confidently come back up. One area here, the report was the stock ServiceNow, and this one has a really good earnings, and you can see the breakout point on Thursday on this earnings right here. And then Friday, it didn't give up much, right? It didn't give up much, so that's a good sign. If I take out all my markups, it was trading pretty bad prior to that, right? You can see right here, although it keep holding near this low right here, which is near the 50-day line. And so now this 10 days is going to come up at this slope, and we want to see if we can hold that slope, right? So the same is for a rally. We want to see the stock just come close to the 10-day and then bounce. Come close to the 10-day and then bounce, right? So so that's the pattern we're looking for. So that's ServiceNow. Let's just jump to the other big software guys, Microsoft. They're reporting this coming week, and again, it's going to move the market. I don't like how you can see clearly here all this selling right here on higher volume. And today's volume is weaker than the last 2 days of selling. So So beware. Looks like, again, lots of institutions selling right now based on this volume. They're all above average. And this one has dropped below 50-day, the red line, and even to the halfway mark of the base, previous base. And here's the 200-day line around 400. So a couple of support levels here. See how that works out. But right now, looks like it might want to come back to near the 10-day, and then and then we'll see. So that's Microsoft. Let's look at Meta. So Meta, you can see this one kind of already like very near the 200-day. It is on the downtrend. So we'll see how it reacts. Again, same thing. Lots of volume selling. You see the volume on the highest volume are all on the sell side. So beware. This is not good. When you see so much volume, that means the big guys are getting out in some ways. Maybe they're not selling everything, but they're selling for sure. And that's sometimes when they do get out, it might take them, again, depending on how much they want to get out, it might take weeks to sell. So that's Meta. Let's jump to Amazon. Very similar chart. Here's the base. So obviously you saw one theme is that they all kind of went up a little bit, break out from the base, and then they fell, right? And again, coming back to that story at the beginning, we talked about this. A fail base is not always catastrophic, but sometimes it could be, right? Especially at the end of a big run, and you have to. I know I'm showing the daily chart here, but if you go to the weekly chart, these guys have run on for quite a while now, since the, I think the rally started, like they said, November 1st, right, of 2022. So we are more than 1.5 years in, and most of these stocks has gone up a lot. I think, so this is around, like, I don't know, like, let's just say like even 90, and now we're at 180, right? But the one that was really obvious is Meta, right? And Meta was around, like, 100, or even if you start at 120, let's say. And now we're at 460. Of course, this is after it came down, right? So 460. At the highest, it was past 500, right? So, to say these guys, and this one has one base here. This is second base. This is the third base. If you read IBD founder O'Neill's book, he talks about how third and fourth base could be the last base before the bull market may be over. And especially a failed base, that's always happen in late stage, like I said, third stage or fourth stage base. And so right now we are in the third stage base, and could be, this could be over. But again, you see how it comes back to the 200-day right now, Meta. And Meta is definitely been under lots of selling lately. And here it is. So we'll see if it finds support there. Obviously you see this bounce right here, intraday. So that's a good sign. But again, if it fell that line, that 50 days is one thing, but to fell the 200-day, that'll be since the beginning of this run, that'll be a pretty big deal. Like if it does cross this, I would say like because the last time we crossed this was right here back in 2021 December, and look at how bad it got right here. Look at this, and then look at this. Right. So again, I'm not saying this will happen, but just be aware. Those are things to be aware of, because if that does happen, there's a slight chance that will happen, and if that happened, a lot of people would be caught off guard. Okay, so that's Meta. Let's jump to Google, because that reported, and very bad week for them. I think the one that stood out for me was YouTube. Like revenue, wasn't as high, and that sparked the sell-off, and then I think the extra spending, capital spending also sparked the sell off. And so yeah, and this one, you know, Alphabet was doing really well, make that 20% cut here for a big cap. And then after that, it just went straight down pretty much. And this is like falling like a knife because it's just going straight down. And again, look at those volume here. Look at all this selling volume, you know. So it's been happening, right? Again, this is another sign, you know, before it happened, right? Like before this week, this is already happening. The selling has already begun, you know, 1 to 2 weeks, more than 2 weeks ago. And, you know, and then you can look at the blue volume. It's like, you know, there's no blue volume. Like, that's the buyers coming in. It's not there. So now the question is, how far will this go? Like, so this is the previous base. It could go, which is near the 200-day. So it could go all the way down here before we see some support. And then we want to see how it reacted this 10-day as it continued to come down. So, yeah. So that's Google. Yeah, and then who else do we have here? We have Apple. Let's look at Apple. This was a really good run. You know, came close to the 20% mark. Not quite, but very close. And then now it's starting to fall. It doesn't look as bad as others because this one came late, right? It came late compared to the other guys. So it's, you know, not too far off the previous base. So this looks really good, and you know, we'll talk about this in terms of I have some notes about AI that IBD gave, wrote about. So we'll talk about that as well. Basically, you know, people are liking the stock because there could be an upgrade cycle for many of Apple customers, right? And because they're releasing their AI phone, that is the reason. So everyone will be paying attention to that story because, you know, obviously their earnings hasn't been that good. You can see here 13, 16, 1%. So those ones okay. And then this recent quarter wasn't that much, but the stock still went up anyway. But again, maybe the bad news already been priced in, and it's maybe investors are looking towards the future, which is the upgrade cycle for AI phones, right? So ANET is another stock that you know, kind of deal with AI stuff, and you know, it has a nice bounce, make that 20% gain from the breakout, and now it has pulled back. And this one depends a lot on Microsoft, Meta. Those are their big customers, you know, to deal with networking and stuff. So let's see how they do. Again, Microsoft or Meta don't do well. ANET is most likely won't do well. So one other stock I want to talk about is obviously CrowdStrike. Big news, you know, with the security issues and stuff. Anyhow, it did drop a lot, right? Obviously, but it followed through the next day, and it followed through the next day, and it followed through the next day. It kept hitting new lows, and even today, look at, like, it just can't keep even close at the high on such a tight range day. You could argue it's getting tighter and tighter, yes, but there's no bounce so far. And this 10-day slope, it's just coming down like a knife. I mean, this is giving up all its gains. Like 400 to almost 400 to, like, wow. Like when we hit 200, that'll be 50%. I don't know if it'll go that far, but I'm just saying. Now let's look at the weekly chart here. So we have this really nice run, and here's the previous base. Again, this is a very similar story. We have this base breakout like this. I was in it right here, and then this week, I think the first day I was, you know, undercut this point, I could stop out, and it saves me. And now, you know, we have undercut the 200-day, so this is very bad from a technical perspective. And this week there's no buyers despite it came down, and obviously they're still having some issues, like not too. I think they say 97% have been restored, but still, like, they didn't restore everybody in a day or two. Like, it's just really bad. It just really took down their reputation, and you know, this is obviously not related to earnings, but going forward it could hurt their earnings, right, as customers may switch and so forth. But why I want to bring this up is because, you know, again, the mega cap stocks have been the leaders this whole bull market. It's been leading from every perspective. But now they're showing a lot of cracks. And obviously CrossFit is not one of them, but I just want to show this as an example that how they could crack even much bigger. The next one is I want to talk about is Tesla. And this one, you know, you can see here on the weekly chart the earnings, right? And this is why I don't trade this stock. It's just they're not making any much growth from an earnings perspective. They just keep decreasing. And you know, and you know, even with all these promises, robo-taxi stuff, you know, and maybe they do have good intention, but and good promises, but the promise, you know, how much more bleeding in terms of like growth, hurting growth, you know, before that happened. And obviously there's lots of long-term investors, including retail investors. But this is, you know, looks like this is the earnings line. And, you know, it's hard to predict the future is what I'm trying to get at. And I'm not a hater on Tesla. I just, like I said, there's so many other stocks to trade, and this stock really hasn't done much for a while now. The last time it did a lot was during the pandemic time, after the pandemic time, but since then, it hasn't really done too much. So, yes, you haven't lost much either, but you know, like this was the biggest drop here, and then big rise. Some rise here, so rise back and then drop again. So I don't know if this is gonna start another leg down or not. I don't know. Yeah, this was the last big run, and then we also had that same run here back in when they first IPO, and then here. Right. So it does go through a lot of gyrations before it took that big leg up, right? So you know, you could argue, yeah, maybe this is the gyration here. Yeah. So who knows? But you know, I don't trade this stock, plain and simple, because of the earnings is going down, and but you know, and that just show how. Let's go back to daily chart. Like, you know, this was trading really tight here after a strong run right there recently, and then it just gave up. And then the problem here again, the same thing, right? We have the 10-day moving average at this slope, and you see the bounce are very weak on Thursday and Friday, right? Again, you can argue Friday, oh, it didn't close at the bottom and it closed at the top of the range, but where is it compared to the previous 2 days? It hasn't moved a dime. It hasn't bounced back. It's waiting for this 10-day to come down, and then again we get rejected as it hit the 10-day and go down further. And then the other big thing is this 200-day line is coming down now, which is also not good, right? Basically 200 days is a long time, and the slope is coming down, shows that they haven't done much from a 200-day perspective, and so that's not a good sign either. So as I mentioned, next week we will have Apple earnings, Microsoft earnings, Meta earnings, Amazon earnings, ANET. Those are some of the bigger guys. We have AI stock. Is AI stocks boom out of steam? And IBD wrote, investors should look for signs that tech companies are monetizing generative AI, including Apple, which hints on production orders for the upcoming AI-enabled iPhone 16, right? So, how many phones are they gonna make? That will be a good sign. Microsoft's Copilot, how is it doing? Is it bringing revenue now? And then the other side of the coin is like, are they gonna keep spending heavily, right? So we have some news from Meta CEO Mark Zuckerberg and Alphabet CEO Sundar Pichai last week considered that tech firms may be investing too much in AI. However, both say that AI underinvestment is a bigger risk than spending too much. So that's what they're saying. Then we have Microsoft OpenAI on Thursday launched a new AI-powered search engine called SearchGPT, and that's going to challenge Google, and that's why Google is continuing to fall even after their earnings report. So yeah, those are important things to think about. Yeah. So let me jump back to some of the other index here. So subgroup, we have XHB, the home builders, jumped 4.3%. We're going to talk about the stocks in the other video, but I want to highlight the ETF here. It is very strong. It's the most obvious group that is very strong right now. And then in terms of as a whole, the other group is biotechs. They are getting stronger, even including even other health stocks too. Like there's obviously some stock that got hammered, like Dexcom today, 40% down. I don't even know what happened, but they just missed on their earnings and guidance or whatever. But this home builders group are really strong. You can see it comes up here, it kind of falls back to the green line, which is the 10-day, and then it bounces on the 10-day. So that's very healthy, and now it's making new high, right? So that's that group. The financial group also did really well, especially the small regional banks group, right? Jumped 5.75%. So I'm going to highlight the ETF here. For the stocks, please follow my other video, which will be out on Sunday, just so you know. It won't be out Saturday, just yeah. Here is KRE, and look at where it is right now. So we broke out right here. This is the early buy point. Here's the traditional buy point, and look at this 10-day. Every time it comes close to it, bounce. Every time it comes close to it, bounce. So 20% mark is around here, so we still have some time to go if we do hit the 20% mark. So that's KRE, the regional banks, lots of small cap banks there doing really well. So finally, we're going to talk about just like what's going to happen next week, right? We have the Federal Reserve meeting on Tuesday, Wednesday. Are they going to signal that rate cuts are coming soon? Are they going to say something could happen in September? Some analysts even call for a rate cut right now. Don't wait till September. So let's see what will happen. That will be a big shock, and small caps will roar if that happens. But even some sort of indication that could still spark another rally, I think, possibly. So yeah, that's why a lot of bulls are saying, hey, the small caps and even some of the mid caps are going to rally throughout this whole summer because of the anticipation of a cut in September. So yeah, make sure you follow my next video on some of the top stocks. I'm going to show you a lot of them and make good progress in the small cap area. So you want to definitely see what stocks. Again, we don't know how long this rotation between tech stocks and all these other cyclical value stocks are. It could take, it could go on for months. Who knows, right? Investors have fully priced in at least a quarter point rate cut now in September, and then maybe another 2 more even this year. That's interesting. And then, but if they don't give if Powell doesn't give a green light on rate cuts, market could tank too. So it could go either way, because now market has such a high expectation of a rate cut. If they come out and say, hey, we don't know, or even like but I highly doubt it. But anyhow, because their tone keep tuning down, right? The last couple of times they talk, they continue to be a little bit more dovish and dovish, especially with recent numbers. Okay, so we also have next week, Tuesday, we have the job opening numbers. We have the ADP employment report Wednesday, and then Friday, the U.S. unemployment report. So we saw last time, it started to jump. I think it was 4.1% or something, unemployment rate. So, and then this time they estimate 206,000. So, which is very in line. Last time was also 200-something thousand. So yeah, so that's pretty much. Thank you for watching this video. Hope you guys have a good weekend. And yeah, I'll come up with the other stocks video on how to trade some of my top 50 stocks list this Sunday. Thank you. Please like or subscribe and comment on this video. Thank you.